Hey everyone, good afternoon and happy Friday. Welcome to episode 5 of the Mortgage Intelligently University, what we also call the MIU. And today we're actually going to talk about a popular question that we probably get asked more than any other question on a daily basis. And that is, what's your rate? What's your rate? Such a common question and yet so difficult to answer because there are so many variables and different parameters that go into disclosing your rate to a client. So Amir is here today, and he is going to talk about a lot of those variables and parameters in order for you guys to understand what's your rate. Amir?
Hey, Ray, how's it going? Happy Friday, guys. So Amir Garami with the MIU and Ray, great topic. We get this all the time. What's your rate? Even without introducing themselves, I know you've experienced this. Borrowers call like, hey, I'm Jim. What's your rate? What kind of rates are you giving out today? It's not that simple, as you know. So there's a lot that goes into it. We're going to just talk about some of the briefly, I'm going to talk about some of the factors that determine what your rate is so that when you are out there as a consumer, or if you're a realtor partner watching this, if a client comes to you, I think it's very smart to say, hey, call a loan officer, but be ready with this kind of information. Because if you want an accurate rate quote, this is what's needed. So I'm going to start off the top. I have a list here. So if I'm looking around, it's because there's a lot. I wish it was like one or two things, but it's not.
Right.
So first thing, what type of loan are you getting? There's conventional, FHA, USDA, jumbo, portfolio, you name it, right? So we got to figure out what kind of loan you're getting. We can't figure out what kind of loan you're getting until you actually apply and we see your debts, your income, your assets, things of that nature. Then we're going to talk about, is it going to be a fixed rate, an ARM product, or something, some sort of a hybrid in between, 30-year fixed, 40-year fixed, whatever. Purpose of the loan, is it a purchase? Is it a refinance? Or is it a cash out? Is it a VA streamline? Is it an FHA streamline? So as you can see, there's each topic has multiple subsets. If it's a purchase transaction, we kind of got to get an idea about the purchase price and your down payment. Purchase price matters and your down payment matter because there's different types of loan categories, as we spoke about in a prior video. Conforming balance loans, high balance loans, jumbo loans, those all come into play. So we need to know your purchase price if you're purchasing. If you're refinancing, how much do you want to borrow? Are you cashing out or do you just want a better rate and term? So there you go. FICO score, and it's not Credit Karma. Credit Karma is not your FICO score, okay? Right. I promise you, for everyone that says Credit Karma score is this, I could show you a regular score that's 40 points below it. So it's not Credit Karma. What's your debt to income? That matters. We need to know, based on your debt to income, you fall into different loan categories. Do you have reserves? How many months of reserves? Are you first-time home buyer? Are you self-employed? Is there a non-occupying co-borrower? Things of that nature. Now let's get to the occupancy. Are you going to occupy this property as your principal residence? Is it an investment property or is it a second home? Okay, so that's occupancy. Now let's talk about the structure. Is it a single family house? Is it a condo? Is it a co-op? Is it a duplex, triplex, or fourplex? Okay. So we need to know those things. Now, are you buying something that's conventionally built or is it a manufactured home? Okay. What county, what city, what zip? So all these factors determine what your rate is. So when someone calls you and say, what's your rate? I could quote them anything because I don't know any information about it. It's actually ignorant and unprofessional of me to quote a rate without having all this data available. Okay. So when you're rate shopping, I know a lot of people go online and they put in some factors on, not to mention any names so we don't get any kind of cease and desist letters, but, major bank websites or major lenders that send people to the moon and everything on a rocket. But, it's hard to have a computerized system ask you all these questions and have you answer it accurately and predict a rate. So when you want a rate quote, be ready with this information and we would 100% be able to give you an accurate rate quote.
Appreciate that information. That's a lot of information.
A lot of
Amir,
information.
thanks for going through that with us. So when a client does call you, Amir, and you're on the phone with them, right? A lot of times, they may not even want to provide or may not know all that information, may not have it all, may not know it all. How do you sort of, handle that sort of scenario when they're sort of, they're looking just for a ballpark? Hey, just give me, what's your rate, right? I mean, I don't know I don't know if I'm buying a house or I'm buying a condo, right? I don't know if I'm putting 20% down or 25% down, because like you mentioned this, I know for condos especially, it makes a difference, right? How much money you
Right.
put down. So how do you sort of overcome those obstacles?
It really depends. If it's if I know that they're working with a realtor partner that we work with, and that realtor partner is professional and he or she knows what they're doing, I try to give them a couple of options based on different types of loans, and property types, single family versus townhouse versus condo. But honestly, I'm very reserved about it. I urge them to apply. Applying online is quick, takes 10 to 15 minutes. It allows us to give accurate data. And it says a lot about a client, because as you know and I know, usually what happens is clients go fall in love with the house and then they try to find a loan to fit what they love, where it needs to be, hey, let me see what I qualify for and find something to love that fits it.
Right.
And when a client starts by not being open to at least the most minimum amount of commitment is doing a 5-10 minute loan application, okay, to see what their rate would be and what product it would fall into, that's not the kind of, I hate to say it, it's not the kind of client and family that I want to work with, because as we mentioned many times in our videos, we see ourselves as an extension of your family. We see a duty that we owe to you. It's an unspoken fiduciary duty that we're delivering advice, financial advice that's going to change the course of your future. It's a big amount of debt, and that debt can grow or be smaller, or whatever the case may be, based on this rate. And this rate requires a 10-minute application. And if you're unwilling to do that, where I'm unwilling to spend my time to provide wrong advice or advice that's going to be inaccurate, because we don't work like that at MCF Mortgage.
Well said, Amir. Thanks for that. That's a great explanation. Appreciate that. The other question, other than what your rate is, can I lock in? Right? I want to lock my rate in today. Oh, that's a great. Let's say they go through that process, right? They take the 10 minutes. You give them great advice, right? And
Right.
you give them the rate that and they love the rate. Their next question is, oh, great, I want to lock that in. Can we talk about like when they can or cannot lock in a rate?
Right. So it's a two-part answer to that. It really depends on the transaction. If it's a refinance application and we have everything necessary to move forward and disclose a loan to them, and we could discuss that on another video, the 6 pieces we need to actually call a loan a loan. But if we have on a refinance, we know the property, we have all the other data, yes, we could lock it in. But on a purchase transaction, you cannot lock it in unless you have actually a purchase contract in hand. So yes, I have people, and I'm sure you've experienced it as well too, that call 6 months when rates are great. They call you like, okay, I want to lock it in. I plan on buying this summer. Unfortunately, that's not the case. To lock in a rate, you need a ratified contract on a purchase transaction. So I do go through with that, and I do explain that to them. But yeah, absolutely, that's what I encounter. I'm sure your experience similar or different.
Absolutely the same. Absolutely, yeah. So that's why I was asking, because it's what's your rate, and then when you get to that part, it's, well, can I lock it in? And then you have to sort of go through the process of it, just explaining to these borrowers, right? Well, once you have a ratified contract, being that it's a purchase, once you have a ratified contract at that time, you can lock that rate in. Because what happens a lot of times is people do shop around, which is fine. And we, strongly recommend people shop around, but they're shopping around when they don't have a ratified contract. And other loan officers, they know this. So they can quote pretty much whatever they want to quote, right? They know you can't lock into an interest rate, right? So they, put people on what, some people, different terminology for it. It's called a rocket, nothing to do with the company. Right. Called rocket, but you put them on a rocket, which is basically, hey, you put them on a low rate and they'll end up coming back, right? once they end up ratifying. So just keep that in mind, everybody listening out there, that until your clients have a ratified contract, then at that point is when they can actually lock in.
And I think you made a really good point about the Rocket. And again, we're not referring to Quicken Home Loans or Rocket Mortgage, but just that's theory where loan officers quote, I want to say bait and switch type of mentality, where they quote a rate and hoping the client's going to come back based on that low quote because they don't have any information. But one thing I've also noticed is that borrowers tend to rate shop, and which is, again, we strongly encourage it because we're confident in our product and our rates, but they rate shop. Rates change on a daily, if not hourly basis sometimes. So you could have searched a rate a week ago and called today, and that rate, 9 out of 10 times will be different. So if you are going to rate shop, whoever you're talking to, get the same quote on the same day, because rates on Monday are not going to be the same for the rates on Friday. So if you're going to compare the guy on Friday with the gal on Monday, it could be apples and oranges, but stick to the same day if you're rate shopping.
Compare apples and apples, as they always say.
All right.
All right, everybody. So that's a lot of good information there shared by Amir. Thank you, Amir. That's a topic that we get, often. Literally on a daily basis, multiple times a day, is what's your rate. So now you guys have a good understanding of what goes into what's your rate, into configuring your rate. So we even get sometimes realtors asking us about what's your rate, right? So until we have that conversation, in-depth conversation, have the borrower hopefully apply, then at that point you offer and provide them with an actual rate that's specific to that particular client. That's it for this session. See you guys next Friday. Everybody have a great weekend. Take care.
So 5 guys, take care.